Yo guys, Lego Games here and welcome to a new video. Today I'm going to be talking to you guys about how I would invest $100. It's worth noting that I am not a financial advisor, so this is for entertainment purposes only, although I believe I can give you guys some good tips throughout the video. So the three strategies I go for, if you guys want to play it as safe as you can in crypto, obviously crypto is a much more volatile asset than any other traditional investing. But the safest I would say to go is a 50-50% split between Bitcoin and Ethereum, or even a 75%-25% split Bitcoin Ethereum. I would say this is the safest as you can get in crypto, but do be careful as obviously the market runs in cycles and coins can correct 50% and altcoins can even correct up to 90%. This means it's important to have an exit strategy. An exit strategy is basically where you get a coin, you know your entry point, and then you know where you're going to sell at. This might be as simple as saying, oh, I've invested $100 in Bitcoin, let's say as an example, and then my investment goes up to $120, and then you might sell your initial investment of $100 and keep the $20 in to see where that goes because it's got no risk from that point onwards. My second strategy for investing is going for the top 20 altcoins. So make sure that these ones have good fundamentals, but I believe most of the ones in the top 20 at the moment actually do, and that is why they are there. Although with altcoins, it's important you do your own research on these and find alternatives, what the coin is competing against and its competitors. Reddit and Twitter are actually both surprisingly good for this. But if you want to take it a step further, you can actually look at the white papers which are found on each of the coin's websites. But do be careful because a lot of people try and shill you their coins. If you don't know what shilling is, it's basically where someone invests in a coin and then they'll go and tell other people to try and create a circle of people who go and try and grow the value of this coin. So there's obviously nothing wrong with this, and this will always happen. You just need to make sure that you don't fall into this trap and you do your research so you know what the coin's about. For example, obviously Shiba Inu and Dogecoin got a lot of publicity, even from Elon Musk. But that is what actually raised these coins' value. In my opinion, there's much better coins to invest out there with good fundamentals, but I also am not against investing in these coins like a lot of other people are. If you go in knowing that they're meme coins, they don't have the best fundamentals compared to other projects out there, but you know that they'll probably have a run up because they're the coins which people talk about outside of crypto. So if you do that, have your exit strategy. I actually don't think they're the worst ones, but I'm not going to say invest in them in this video because I believe there's much other better coins with better fundamentals. Furthermore, if $100 is only your initial investment and you want to add more crypto over time, I believe that dollar cost averaging, otherwise known as DCA, you might know that term from other videos, is where basically you put an initial investment in, let's say $20 if you've got $100 spend overall, and then you start adding $20 a week. So for example, $20 on Bitcoin for the first week, $20 on week 2, and all the way until you get to week 5. The whole point of this is basically so you don't end up buying at market top. So obviously the market price changes week to week, and basically buying a little bit each week just means that your average buy cost will slowly decrease and you won't have brought at a market top or market low. So this strategy actually seems to work really well for investors, and most people who DCA over a long period of time do end up getting gains. So the third strategy, which I'm not actually going to cover in this video, is going into moon coins. So you're probably asking, if you don't know what investing is, what is a moon coin? A moon coin is a coin with a low market cap at the current time, And if a bit of money gets pumped into it, the value will rise significantly. Although these are the sort of coins which can also go to zero easily. That's why I haven't put them in this video. But when you see people who have life-changing gains on like Twitter and all those sort of places, it's normally due to a meme coin. So if you guys want me to do a video on that, I can definitely do it. Although as a starter, I probably just stick to like the top 20 coins until you know a little bit more about the space, and then slowly grow your portfolio into a couple more risks maybe. So guys, it's worth noting, if you invest in altcoins, their price action will match the same as Bitcoin's. For example, if Bitcoin goes up, altcoins will follow that trend and also go up. This also means that if the price of Bitcoin goes down, the price of altcoins will also go down. Obviously, there are a few exceptions to this rule. For example, there could be a major development, an announcement for a coin. A recent example of this is Solana NFTs getting introduced on OpenSea, the largest NFT network out there. I'll play the announcement clip here. So this announcement caused Solana to actually rally up 12%, while Bitcoin was in the red that day, going down around 3%. Now, this may be a step too far for this introductory video, but I thought I'd still say it just because I think it is an important thing to be aware of, even if you don't understand it, as it does explain a lot of Bitcoin's volatility. But basically, there are key support levels within Bitcoin's price. This is not too important if you're a holder, this is more if you're a trader, but for you guys I recommend just literally holding the coins. Most people lose out on trading, whereas holding tends to be a winner. But for the support process, it might be worth following a Twitter analyst, just so they tell you when it's been hit. That's how I do it. But basically, when Bitcoin passes a key support, it will rally up until it matches its next resistance. So that's the next price where it will start to struggle to go past. On the other hand, this means that if it goes below a support, it can actually crash until it hits a next historical support level. So you need to be careful of this. It's nothing to be worried of. It's just something that you need to be aware of, as it's a big reason for the volatility of Bitcoin. Normally, this is due to a correction. So if you guys don't know how cryptographs work, you normally actually want a coin to have what they call a retracement, which is where it goes down slightly after a pump. So say a coin goes up by 10%, then it goes down by like 3%. This is normally quite healthy because you actually want it to go down before going back up for a further rally of about 5%, let's say, as an example. Just remember guys, if it didn't do this, if a coin just goes straight up and doesn't have the healthy price corrections, a price can fall just as quick as it goes up. But as I said guys, if you didn't understand that, don't be too alarmed. The takeaway from what I just said is literally that the market is very volatile, and a slight decrease after a large increase is not always a bad thing. Also, I know I said altcoins follow Bitcoin's price action, but you may not always see that altcoins rise as much as you would expect when Bitcoin goes on a rally. This is due to people FOMOing into Bitcoin, which is a fear of missing out. And this means that people are scared of missing out on profits, so they buy into a price increase. Although altcoins will slightly rise during this phase, it's actually worth noting they actually tend to see a further price increase when Bitcoin's price stabilizes after an increase in price. This is due to people taking profits from a Bitcoin pump and then diversifying their portfolio into altcoins. So for altcoins, which altcoins are anything that isn't Bitcoin, including Ethereum, although I think people are starting to say that's not so much of an altcoin anymore. What you are looking for the maximum gains is something called altcoin season. This normally follows a Bitcoin bull run and is shown, normally indicated by Bitcoin losing dominance in the market. So guys, that was a little something about the market there. Don't worry if that went over your head slightly. Most of all, if you actually hold a coin for a extended period of time, most of the time you tend to be okay in this market. As something I've watched from a Mark Tilbury video and I thought was really good, time in the market beats timing the market. But yeah, let's get on to my next point. So in this video, I have chosen 4 coins, $25 each with your initial $100 investment. But like I said, to get the 40, 50 times gains that you see, you'll probably have to go into moonshots. Although I think that you can get proper, decent returns on your investment with these choices, as long as they follow the path that we're expecting. Obviously, you can get something which is called fuddish news, which is the media bringing out news that brings the price down of Bitcoin. I just like to say, if there is fuddish news and there's a 30% correction, unlike other traditional markets, this is actually pretty normal in crypto. So I definitely hold on. I wouldn't panic sell as a new investor. I would say only over 50%, 60% deductions is probably a signal of a bull market. Of a bear market, sorry. So I'd actually say that if there's a 30% decrease, don't be as worried as you would in traditional markets. Although there's also a thing called stop losses, which is basically if your investment decreases beyond a certain point, the app will automatically sell it. And I can go into that if you guys are interested. So like I said, I chose these 4 coins because I think they've got solid fundamentals, they've got good roadmaps, a roadmap being basically a plan of what a coin's development team is going to do. So first coin we're going to look at is DOT. The full name is Polkadot, but the trading name is DOT. And this coin was founded in 2016. And basically it allows data to be sent across previously incompatible networks. And also the whole of last year, everyone thought this coin was going to pump, but it just never really did. So there's a couple coins which I've actually got that reasoning for. And I just believe that they will get that pump during this bull cycle, which I think we're entering. So the next $25 I've got within this video is in a coin called Quant, QNT. So the main reason is because this coin solves interoperability, which is a massive problem within the space. Also, the CEO, Gilbert, has a lot of links as he actually worked in the Federal Reserve System and he is currently a board member in the Digital Pound Foundation, which is actually really bullish news for Quant. They carry on releasing stuff and it's basically going to be the link between Quant and the government for something called CBDCs. Also, at the moment, it's down significantly from its all-time high. And in my opinion, there's a room for a significant amount of growth, as if it gets the same market cap as, for example, as if it's got an increase in its market cap, the price tends to go up a bit more than like a coin like, like a coin like Doge. So the really important thing to understand within the crypto space is basically the total supply of a coin. So the more of a total supply of a coin, the harder the price is to move and the more money that needs to be pointed in. For example, you get a lot of people, I carry on going back to my Dogecoin examples, but there's a lot of people say, oh, Dogecoin is going to go to $10. Realistically, that wouldn't actually happen because the market cap, ginormous increase to do this, whereas QNT would need a much lower increase invested in for the price to move. So the next one I'm going to look at is $25 in eGold. As another one, this is because it's also quite a long way off its all-time high, but it has held its price pretty well. So also, I found this fact that I'm going to read out to you guys because I found it really interesting. As of December 2021, the circulating supply of eGold coins was 20 million, with 57% of these locked up in the network staking rewards protocol. So basically, staking is where you lock your coins up for a period of time, and then basically you'll earn a percentage. You'll earn a percentage of your coins back as rewards. So for example, a coin that gives you 8% APY reward, and you lock it up for 6 months, it's 8% per year, so you will actually get 4% on your 100 coins back. So you'll get 4 coins for free. And then after those 6 months, you can actually unlock your 100, and then you'll have 104 coins. My final choice for this video is Chainlink, and like the other one, this one actually never got its pump. That's why I'm actually so intrigued on how this one does in this market. But it's a decentralized blockchain oracle built on Ethereum, and as stated here, the network is intended to be used to facilitate the transfer of tamper-proof data from off-chain sources to on-chain smart contracts. But like I said, it's one of the top 20 cryptos which never got the pump everyone expected. That's the general gist of patterns I'm actually going for in this video. So I believe that now the next bull market or the next bullish phase is playing out, I believe that these ones will do okay. So guys, that's how I'd invest $100. If you guys wanted a more moonshotty video, and do understand the risk of that, because as I said, the higher gains you'll probably earn, the more risk you have to take, obviously. But if you wanted a moonshot video, I'll happily provide it, and just comment that in the comment section down below, and I'll see you guys next time. Peace. So guys, on to the last part of the video. You're probably thinking, where do I buy cryptocurrency? If you already know all this stuff, this part of the video is not for you. So I believe the best platform for a beginner is actually Coinbase, because I believe their interface is the most user-friendly out there. Although do be aware that their fees are on the higher side of the industry. Although they've never had problems, and as far as exchanges go, they are very secure. Also, they've got a learn to earn scheme where you can earn money in cryptocurrencies from answering a few questions. And you can't actually get questions wrong because it gives you unlimited attempts. So that is one of the things. And I believe you can earn up to about $20, $30. Finally, you might see a percentage on some of the cryptocurrencies. This is basically means that it's staking your crypto for you. So you can actually earn a percentage back from some cryptos. Although if you've watched a lot of cryptocurrency videos, you'll probably have heard the phrase, not your keys, not your crypto. When you become more aware within the space, you may actually want to get a hardware wallet for higher security. This allows you to take your crypto off of exchanges, as if something goes wrong with an exchange, you will lose your crypto. Although I would only really look into this if you expand your portfolio and hold higher amounts. Anyway guys, let's get into my second platform choice, Crypto.com. So I like this one because it gives you a higher variety of altcoins to invest in, and it also provides a chance to stake your cryptocurrency through the supercharger part of the app. What I really like about Crypto.com is the advertising aspect they do. So they spend a lot of money on advertising, and they're a quickly growing company. So this has actually made me really interested in investing in their native token Crow, as for staking that token there's loads of rewards. So the most popular, in my opinion, exchange is Binance, although I don't believe it's got the most user-friendly interface out there. That's why I put it last. Also, it's worth noting that last year, being a person from the UK, there's real problems with withdrawing money from Binance, as the banks blocked any transactions. But overall, they're very safe and a very reliable exchange. They just went through a couple teething problems last year. The final exchange I'm going to be talking about is Nexo, and this one is more of an exchange for holding cryptocurrency for a long period of time instead of trading, as they pay some of the highest APY returns out there on an exchange. If you stake it privately, you can get higher, like I said earlier in the video. To get the highest rates, you just need to hold a percentage of their native token, the Nexo token. So this is something that's really common in the crypto space. Basically, holding a token for a platform gets you rewards on their exchange, or benefits at least. Also, this isn't an ad. I'm not a big enough YouTuber for that. But you can actually get $25 of Bitcoin in free if you invest $100 on Nexo. I will leave my referral link down below. It would help me out if you used it, but there's no pressure on using it. Go and use anyone else's out there if you wanted to. But if you use someone's referral code and then you went and got your friend to, you can get $50 right there. So it's 25 for you signing up, and then if you got your friend to, and then that's a 50% increase on what you have invested already without even trading. Although do be aware that it does take a month for most rewards to come through on most exchanges really, and especially on Nexo. If you do that, it will take you 30 days to do that. But yeah guys, I hope that helped a little bit. They're the exchanges I'd recommend. I use all of them. With smaller amounts on some than others. I think Crypto.com's got my largest holdings on exchanges anyway. But yeah guys, I'll see you guys next time, and peace.